Okay, welcome back. So, this week this video we're doing Euro USD, analyzing the week, see how the week go, and we go from there. So we have V-shape sideways movement and entry here. Let's see if that is correct. No, that's not correct. So here is not the entry point. Let's see. So the reason why I say no is because on the 4 hour, as you can see, the moving average is in order. Then on the all right, welcome back. What do you call it? On the 1 hour, you can see here the moving average is not in order. So for me, that's a no. That's a no trade. Even though you can see that it did do well, that's a no for me. So the moving average became what do you call it? In order. I'm losing my train of thought. It became in order at this point here. So let's have a look at it on the 4 hour time frame. And you can see that here is where the moving average was in order. Okay. Now the problem is this. The problem is here we have the pivot line. We already have this close of this candle. It's a very strong candle. Volume is looking really nice, right? But we also have on the RSI, we're in overbought territory. We're at 81. Okay, so the good part is the volume is good. The bad part is excuse me. The bad part is we're in 81 or at overbought territory, so the market will be looking to reverse soon. Excuse me. And also we're close to the pivot line. So for this particular trade, excuse me, I would say no. One, because if you wait for the close of this candle, now we're too late. At this candle, we are at 90. You don't want to get in here, right? Excuse me. Right, so you don't want to get into this trade here. And by just looking at the rules, you can see why. You see what happens next. The market then started moving sideways and then crashed down, right? So if you follow the rules, you stick to the rules, then you won't have a problem, right? So we have here, what's this? Monday. It's still Monday. Tuesday, we have in the sideways movement, right? Tuesday, 2 o'clock, we had a pullback. Wednesday, 10 o'clock, we had the crash, right? And then sideways movement going into the end of the week, Thursday and Friday, right? And then this week, the market continued crashing further down. Now, why would this be happening? So let's go back for a bit. We had the V-shaped sideways movement. Would have been a nice breakout if you did not follow the strategy. Remember, the moving average here on the hourly was not in order. It was only in order on the 4 hour and the daily, right? So the moving averages needs to be in order and on all 3 time frames. That's called time frame agreement, okay? And then let's have a look at the week. Wednesday, we had the non-farm employment change. Thursday, we had the unemployment claim. And then Friday, we had the CPI. So remember what I said. Once you have non-farm week and CPI week, it's best to just be cautious for that week. If you do want to trade, you can go into a trade, maybe get out of the trade, maybe an hour before this time, or manage your risk properly. Okay, so with this week you could on euro, nope, there's no trade here, because one, the rule is that you don't want to drive into a wall. This pivot line is a wall, even though on the daily we didn't have that. The pivot line didn't, oh, it did actually. Oh, it did actually. Yeah, it did. So, all right. So on the daily, the pivot line was there, and on the 4-hourly, the pivot line was there. That right there in itself is a no, complete no. Right? Stay out of that trade. So this is one reason to stay out of the trade. Right? The moving averages not being in order is another reason to stay out of the trade. Okay? And it proves, well, it didn't go far and it crashed right back down. Okay? That's it for Euro USD reflection. So please comment, like, subscribe. Let me know if this helped you. If the weekly reflections are helping you, should I continue? I mean, I do plan to continue anyway, but let me know your feedback. All right, so like, comment, subscribe. Peace. See you next week.